What's going on, everybody? It's May 16th, 2023, Daily Log episode number 2, volume 2. Today we're going to cover ES and the price action that unfolded. And then I didn't take any trades today on the account, so I'll show that, the transparency there. And basically my thought process throughout the whole morning session. If you're inside of the Telegram, it's going to be linked below. Same thing with my Twitter. It's going to be in the bio. The Telegram link is pinned to the top of my Twitter page if you can't find it for some reason. So, like I said, for those that are new, I am very active on Telegram. So throughout the entire morning session, for most morning sessions, I'm at least trying to guide most of you on what you should expect or the environment or the draw on liquidity. And what I was annotating today is how we're basically pre the news event driver, we're basically in no man's land, which to me means there's no clear draw on liquidity, even for scalping. And I know in this range, it's basically no man's land when you're looking at a higher time frame perspective. When you go down to lower time frames, when I see that, when there's no clear draw on liquidity, there's no PD raise to target, there's nothing for me to look for discounts or premiums to retrace into, that automatically signals me to stay on the sidelines, wait for time, and see if something will prove itself basically fruitful. And even with the news event driver, there wasn't much volatility with it. It did move up, and then we saw a displacement lower, and then the open, we saw a lot of manipulation, which I will go over. Even today, I was annotating throughout the entire session how it's extremely difficult to navigate, extremely difficult. And it's one thing when you look back at the charts in hindsight, and I'll go over this today because I almost jumped into a trade today, not because of FOMO. My rules were there, everything was there. And I talked with a couple other people that actually took this trade, and it's perfectly okay if you took this loss. It's the same thing that happened to me yesterday. All of your rules are there, everything was there in alignment, but due to the conditions that we're in, it's so difficult to trust price for me. And it's the same thing I learned yesterday is every time we're taking out sell side liquidity, we automatically revert back into the range every single time. So I'm extremely cautious right now. I'm waiting for really a displacement out of this range here. So once we get a closure underneath this BISI here or above this SIBI, I think we'll have some at least clarity as far as where price would like to lead to next. Back to the main point is if you're looking at all of this in hindsight and maybe you're not able to trade or watch price in real time, I guess you can't understand the emotions that will play out because, like I said, it's very easy to go back in hindsight and say, oh yeah, I wouldn't have taken this or I would have. In real time, it's so much different. And I just want you guys to understand that. If you obviously don't have the time to watch in the AM session or in the live session, it's perfectly okay. I understand life gets in the way, but I just want those who, maybe are not watching price and going back and getting a false sense of confidence. It's very much different when you're in the session. So I'll touch on later portions of the video. Daily time frame, nothing's changed. We're still inside of the exact same range. I'm not expecting much. Every day I'm hopeful. We'll put it that way. Every day I'm hopeful that we at least break out of this range at one point or another, but it's basically gambling at this point. Because to me, we're all trying to predict that next big day. We're trying to figure out when this next movement's going to break out of the range, and you don't know when that's going to happen. So the best case scenario right now is waiting for this daily time frame to create certainty for you. And the daily time frame will be your guide in terms of where the narrative of the next draw on liquidity is going to be. Right now, it's 50-50 to me. If you go to ICT's Twitter, he talked about the reasons why we're stuck in such a consolidational state right now, which we'll break out of. It's completely normal. Nothing's broken. The model's not broken. The concepts aren't broken. You're not broken. It just simply means that we're in a consolidational period. And you have to realize that you can't push these type of things. We, as traders, unfortunately signed up to something that we cannot have willpower over. It's very much unlike any other profession out there because most professions you can really push Even in sales, you want to make 1,000 calls, 2,000 calls a day, or whatever it is, you can push for that, but you can't push these markets. No matter how hard you try, you're going to just backpedal yourself. You're going to dig yourself a bigger hole. And either you're going to learn through somebody with experience or you're going to learn through pain. And I would choose option A if I could go back in time. Unfortunately, I learned through an immense amount of pain. So it's not worth it. You don't need it. Going into the 4-hour time frame, we're getting tighter and tighter, meaning that we're creating smaller and smaller ranges as the days go by. To make note on the daily time frame, we have 2 closures. Actually, today we had the previous day low taken out, but these are an inside day. So inside of this previous day low and that previous day high, we're still trading inside of that. So we're not breaking outside of previous day highs or lows, and we're just getting smaller and smaller in the range, which to me is just like a rubber band. Eventually something's going to snap one way or the other. Just have to wait for that. So 4-hour time frame, nothing much to note in here. 1-hour time frame. The sell side liquidity I noted at 41.23 was tagged right on the market close of the day. So it was nothing significant. I didn't feel as if that was even worth noting. It was just something right on market close. We went ahead and took that out and then immediately reverted. So it's classic to what's been happening. If you look at ICT's post, every time we take out sell side liquidity, we keep reverting. So we took out sell stops there, reverted. There's some lower time frames, took out sell stops here, reverted, took out sell stops internally in here, reverted. Again, today we took out sell stops, reverted back, took out sell stops, reverted back. And the reason I'm mentioning that, he's mentioning that, is because if you look at the buy side, none of that's been tagged. None of that is basically being taken out. It's all being left. So I believe at one point or another that will be taken out. I don't know if I completely agree with his bias in terms of looking for the buy side to be taken right away. I think at maybe a later point, depending on what happens, we could fully collapse and then take it out at a later point. We'll just have to see what happens. Everything to me is 50-50 right now, so I'm clearly open-minded. If you toggle, at least for me, the new week opening gaps and the new day opening gaps, it gives you a little bit more clarity as terms of what was happening on the lower time frames today. I think really the only fruitful time frame was the 5-minute. And I'll cover the dollar as well, because I think that was a significant factor in terms of guiding at least myself today where price should likely lead to. We didn't quite get what I wanted. Actually, funny enough, let me go to paper trading. And if you guys saw me do this, I do this from time to time. If I'm unsure of the direction or the bias for the day or price in general, I'll paper trade. Or if I just have an itch to click a button, go to paper trading, click the button, because that will get that itch out. At least personally for me, rather than going to a live account or a funded challenge or whatever it is, and clicking the button there, because to me, this scratches the itch for me, and especially if I'm trying to figure out which way price is going. I have a couple executions that we saw on the Telegram today. I'll show, but it's nothing significant. I don't feel as if I missed out or anything, or I'm mad or upset. It was just something I was guiding throughout the session. So here, this is the hour before the open. We had core retail sales. You saw this raid on buy side liquidity here. So that's an internal buy side liquidity, because from that dealing range high down to that dealing range low at that time, this is internal buy side liquidity. Let me take this away just so it's clear. So at that time, if you reeled it back, I know this is not fully, but if we just closed here, that's internal buy side liquidity, okay? Taking that out, dropping lower. And this is what I mean by letting time do the work, because a lot of the times before, when I was premature, I'd be entering in before the open and trying to, snag an entry. But to me, I'm letting time do the work. I understand that it's always time over price. So even if there is a news event driver, especially in these conditions, even as before the open, I'm still waiting for the open. I'm still waiting for the silver bullet hour, because to me, that's creating the highest probability right now, especially in these conditions. It's almost next to impossible right now to catch a trade right now, in my opinion. You may get lucky. You may have a couple short-lived trades, but in general, I would just advise to sit on the sidelines until that daily time frame clears up. But once we dropped lower here, I was annotating how that low at 41.35, and then if we put on the new week opening gaps again, this new week opening gap was a draw on liquidity for me. So I'll cover the dollar as well. The reason why I was leaning towards this. If you look at NASDAQ, NASDAQ was printing a bearish SMT, so it was a supporting factor how we took out buy side liquidity, returned into the old new week opening gaps, rejected off of that, had a shift in market structure underneath that low there, created a fair value gap in here on the 5-minute. We IOFED'd it, and then I was looking for a continuation to the low, which we didn't get. So even right on the open, this is what I was talking about with manipulation. You really have to be careful in these times. You can't just be jumping in before the open in these environments, because they can whip back on you just like this. You can't expect price to run into that low there, especially before the open. So here we have price returning back into a new day opening gap. This was our current new day opening gap. This is a previous one, so just ignore it. We returned into that, and then we saw a displacement lower. And this is what I was talking about with manipulation, is you're getting these whip saws back and forth. And it's not something that you want to be a part of. It's not something that's high probability to me. We eventually displaced lower, taking out the sell side liquidity, and then came into the new week opening gap. And this is where, let me see, I don't believe it's in replay mode. So if this was in a high probability condition, and what's a high probability condition? A high probability condition is where on a daily time frame, a weekly time frame, even a 4-hour, a macro scale, where you're in a trending model, where there's a clear draw on liquidity, price is not very fickle, meaning that it's very stuck in a range. You guys get what that means now. I can't trust these type of setups, and especially the way that before the open, the way price was manipulating, I really couldn't trust this. But I was trying to get a feel for it, and I'll show my trading view executions. In a good environment, you can take a screenshot of this and place this in a good environment, and I'll take it 10 out of 10 times because it's a beautiful model. But just because a model forms doesn't automatically certify it. You have to understand the conditions. You have to understand the draw on liquidity on a higher time frame. You have to understand time in and of itself. Is it ready to move in a certain direction? What's the time? All of these factors are something you're not looking at that's basically within the model that you're looking at. And the reason I'm stating that as well is we'll dig down into this portion where I almost entered into a trade, but I caught myself and I said, okay, I'm not gonna place a trade today. I don't feel comfortable with price. I'm not comfortable with risking, and that's something that all leads back to psychology. And everybody has their own personal framework when it comes to psychology. You have to understand that yourself. You have to understand the certain flaws and false illusions that reside within your psychology, and figure those out. So let me do this real quick. As I said, it's nothing special. So I saw a 5-minute fair value gap here, which is my personal favorite model. It's still ICT's model in a sense, but I've kind of just customized it where the 5-minute time frame fair value gaps, when you have them nested, and then you have a supporting factor like a breaker. So if I go down to lower time frames, this last down close candle, if you extend it out in time, that's a bearish breaker. So it's confluence. You have a bearish breaker, you have a fair value gap, and it's residing inside of a premium. After we took out buy stops here, returned into a premium again, rejected off a new week opening gap, new day opening gap, and displaced lower. We had a shift in market structure underneath that low there, looking to target the new week opening gap. And then this here is a balanced price range. So a balanced price range is we have one pass here, and we have a second pass. So there's no buy side or sell side delivery inside of that. Price needs to redeliver into it. And that's another kind of reasoning. If you took the trade today in here, and I'll show where I almost went into the trade, it was the reasoning why I didn't want to take it, is we're taking out sell stops. And every time we take out sell stops in this environment, we're just immediately reverting. And it's extremely, it's extremely hard to navigate, right? So to me, I just elected to let the trade go. Even if it ran, I didn't care. If I was in the trade, I would have been trying to target 41.23. But I saw that we reached down into this discount, into the BPR, and then I just wasn't willing to go short. So let me dig into a 1 minute so we can see the executions. So inside of that 5 minute, you can refine the 1 minute. So from that high there down to that low is your SIBI. And then if you look a little bit closer on the 1 minute, you have your balanced price range. So I'll actually take this away. This is what I was looking at, balanced price range in here. And then all of these down close candles are your bearish breaker. So you extend that in time. Residing inside of what? A premium. From this dealing range high down to this low, reached up into a premium. That's equilibrium there. So I sold short here. Not a perfect entry. We displaced lower, taking out sell side liquidity in here. I just took a partial off there, and then I think I took another one at the balanced price range. So don't read too much into it. It's just me trying to navigate today and get a feel for it. But once we dip down into here, I was looking at the 2 minute, the 3 minute, and I was scanning it. And I did like the fair value gaps. I did like the displacement and basically the energetic of it. If you're ever wondering with models, at least for me, the energetic displacements and the movements and how wide SIBIs or BISIs can be, that's really important to me. If they're really small SIBIs or BISIs and there's not a lot of energetic movement behind it and it doesn't look like it wants to get anywhere quick, it deems to me lower probability. But in here, this is a nice size 3 minute. I believe there is 4, 3, 2, and 1. So there's a 4 minute in here. Take this back. There's a 4 minute in here, a 3 minute. We had our 2 minute in here with the new week opening gap as confluence as well. And then there was a 1 minute. The only issue, I guess, in a sense, was it wasn't really residing inside of a premium, but there's times where I don't necessarily need that. So that's another discussion. There wasn't a 5 minute, but I don't need that as well. It is something that I really do enjoy and I really do like and I trust, but it wasn't in there. Now, when I'm just looking at this, that's great, but what else are we using? I'm using the dollar index, and I was annotating throughout the session how the dollar index was likely to go higher, and we were getting confirmations of that. So if you're looking for lower prices in ES, you want to see supporting factors in dollar that it wants to run higher, which we were getting. So to me, if you took this trade and you took a loss, it is what it is. It's not a big deal. To me, you would have followed all the rules and things set out for you. It's just basically the conditions that we're in. And I guess that's where, for me today, the experience paid. You saw yesterday I took a loss. It's the same thing that would have happened here today. It's no big deal. It doesn't mean that you're a bad trader or an analyst or the concepts are broken. It's just simply the fact that we're in really weird conditions. After we reached down into the balanced price range, and then we started to close above these SIBIs in here, I immediately told you guys I'm done for the day. There's no bias. Why? Because there's no reason when I'm looking at price, it should have respected this. If we were to continue lower, it should have respected this, and we should have dug lower into the sell side liquidity. But I'm very aware of the conditions that we're in, and I just have to basically elect not to trade. And that's the best thing you can do, because you can't push price. Am I mad or upset I didn't catch this? No, because at that point in time, I didn't trust price. I don't really trust price at all right now. So it's a reason why, if you're wondering why I took a paper trade not on a real, account, because at this point in time, we could have easily taken out sell stops and then reverted and done the same thing and went for the buy side. Everything in here is 50-50. It's basically gambling. Until we break out of this range, I don't deem anything really high probability. So we just traded basically aimlessly, drifting sideways the entire day. So if you're trading inside of here, that's where I would tell you, you're gambling, you need to stop. All of this is stupid. All of this trading in here is nonsense. And if you took a trade and you made money, I mean, congratulations. But to me, you're just basically forging into your mind that you can continue to do this, when in reality, you will get yourself burnt way more times than ever you'll win in this condition. All of this is just trading aimlessly garbage. I can't stress that enough. And like I said, on the market close, we dumped lower. Even in here, I would have liked to see this SIBI respected if it was clean price action, quote unquote. We dug above that. I mean, bearish order block, but it's really not a clean order block to me, especially behind all of this garbage. And then we saw just a dump lower right on market close within the last 10, 20 minutes, right into the sell side, and then we reverted immediately back into the new week opening gap. So we just continuously keep hovering the new week opening gap. We're consolidating around it. To me, I just observe in these conditions, at least how the precision is with a lot of these concepts, and I keep my faith in them, and I keep my faith in myself. Eventually, we're going to get out of this. It can't be held like this for forever. Unfortunately, like I said, it's just something that we signed up for as traders, and the only thing I can really recommend is just go find something else to do with your time and just check back every day at the daily time frame. And if we didn't break out, then just don't trade. That is what it is. For somebody like me, and I'm not saying that I can trade this because it's extremely difficult to navigate, but even for me, somebody with a lot of years of experience, this is still so hard for me to sit still in, and it's hard to watch live. Okay, so if you have a gambler kind of tendencies or mindset, it's going to induce you terribly. It's like I said, it's really hard for me even with pretty good psychology to sit through this without clicking a button. So hopefully that cleared up today on ES. Let me go over dollar index. I thought the dollar index was pretty clean today. We saw dollar drop into the fair value gap that I mentioned yesterday. Saw displacement away from it. These are the highest probability, I guess you could just say in general, PD raise. If you have a daily fair value gap, daily bullish order block, bearish, whatever, breaker, and you go on to lower time frames as nested, it's a really high probability PD array, and you can expect that to hold, especially if you know the draw on liquidity and you know the narrative. It's really nice. So we drop down into here, into a discount relative from this dealing range low to that dealing range high. And somebody had a question, why would I be looking at this one and maybe not this one, because this is inside of a premium? That's what they're asking. Well, that, like I said, that has to do with a lot of factors, but if you looked at a 4-hour time frame and you looked at that dealing range from that dealing range low to that high, there's no reason to return back into this discount. We've already went into it. We've already done the work in here, and this is the current dealing range. So if anything, this is the only thing that should be respected. If we broke underneath this one, then we would likely see the sell side attack. There's no reason to return into this discount. So if you're ever wondering why prices are returning into discounts or premiums, maybe look at other time frames, other dealing ranges, try to understand the logic and the reasoning why it wouldn't need to do that. If we dig into a 1-hour time frame here, I mentioned how this is my last point of interest, but I also talked about this one very briefly last night. Like I said, the dealing range is from that low to that high. So we're dropping down into a deep discount into this fair value gap here, reclaimed. We just touched it, and then we displaced higher. And I was annotating throughout the session how this SIBI was going to be an important factor. And I annotated if we closed above it, if you went to your 30-minute time frame, I was predicting how this would become a bullish breaker. And in good conditions, you can predict breakers before they even happen, and you can accumulate positions inside of that breaker before it even becomes a breaker. And that has to do with higher time frame context. Like I said, I was fairly confident in dollar going higher due to the daily time frame, 4-hour, 1-hour, etc. You can see here, respecting bullish PD arrays in here, right? Respecting the bullish fair value gap or disrespecting bearish. So that's a signal there. We're displacing higher. And if you're trading Forex or trading ES in good conditions, before this even broke above it, you could accumulate short positions in here and look for dollar to make that higher high and make the bullish breaker. So we displaced higher, and then we've just basically been trading aimlessly on top of it. I would expect dollar to continue higher from here. I would like to see this high be taken at 102.753, and then the next buy side liquidity at 102.808. That's at least what I'm looking at. And all you have to do is just follow order flow, follow the PD arrays, and see if they continuously respect them. If they stop respecting them, that's when you know something's up. You know that there's a break in order flow, and you probably have something wrong. So we broke underneath this fair value gap. To me, off the context that we've already dropped down into a discount, we've already displaced higher. There's a bullish breaker in here with the 1-hour fair value gap. This should hold. If we're actually bullish, this should hold, and we should see displacement higher. If we don't, then we probably have something wrong and you have to reanalyze. Same thing with the 4-hour order block in here. Annotate that with the small fair value gap. See if we can drop down into that. This fair value gap will still act as support. So watch the premium end there. Let's see if we can get displacement into the buy side. I don't see a reason on a daily time frame to go lower as of now. Okay, things can change overnight, coming into the session, etc. You guys know. I think that's gonna be it for today. I think I covered everything. Oh, give me 1 second. Transparency. Sorry, don't let me forget this. This is the whole point of these videos. This is the account we left off yesterday, 201,877. The exact same balance, nothing changed. I'm not telling a lie when I didn't take a trade today. This is what I'm saying is there's a lot of people that tell you they didn't take a trade or they can go over price and look, phenomenal, but they in secrecy they did, and I didn't. Okay, everything's the same. You can see here yesterday this was the trade, and we haven't taken anything. There's no next button. I can't move over. Obviously, we're in the same account balance. So, yeah, that's going to be it for today. Hopefully you guys enjoyed. Please give the channel a thumbs up, subscribe, follow my Twitter, Telegram, etc., etc. Till tomorrow, good luck and good trading, everybody. Be safe.